series. Today we're looking at companies which are helping to digitize the public and private sectors. My name is Victor Ogbar. I cover tech stocks here at Danske. With us today we have Formpipe CEO Christian Sundin. So Christian, thanks for being with us. And we'll start off with a brief presentation by you and then a Q&A afterwards. So thanks for being here and please go ahead.
Thank you, Victor. My name is Christian Sundin, CEO of Formpipe. We'll of course share a presentation here, so hopefully that will come up on your screens now. If I can get a thumbs up that you're seeing the presentation.
Yes.
Great, perfect. Welcome everyone. Thanks for joining. As Victor said, this seminar is mainly focused on public sector, but we also have parts in third of our business towards private sector. And actually that is where it's most activities at the moment for our sake. And I will today focus on a very, very short introduction to Formpipe. For those of you who are completely new to Formpipe, I think reach out to me and I schedule separate sessions with you to go in detail on the basis of what we're doing and what we help our customers with. But I will start with a very, very short introduction. Then I will focus on the highlights and results of 2020. And then I will pay most attention and give most time on our new published strategy for growth and financial targets that we published with the Q4 report. Who are Formpipe? What do we do? We are a market leader in the space called content services, formerly named enterprise content management by likes as Gartner. In brief, we can say that we are digitalizing, helping society and companies to bring order in their important digital information. We have our legacy from the public sector space, where public sector has been front runners in terms of keeping good order on digital information, especially in the Nordics. And we're market leader in case and document management for the public sector in both Sweden and in Denmark. But as I mentioned, we also have approximately a third of our business, and the fastest growing part is through an international partner network to the private sector, very closely connected to the ERP markets, where we help the ERP vendors to be more efficient with their document management. We're about 245 people in Denmark and Sweden and UK, where we have most people, and then we have sales representation in US and Germany. And on top of that, we are doing most of our product development offshore in Ukraine, and we have around 50 dedicated people for us working on a contractual basis in Ukraine for product development. The highlights of 2020, a very challenging year. I'm sure everyone is saying that, and we all know it. We're proud that we have been very adaptable during that year. We very swiftly shifted to working remotely. We had the processes, routines, the tools, and the structures in place to, in a secure way, being able to work remotely, and not only with our own things, but also to help and assist our customers remotely. Being ISO 27001 certified, we know what information security is about and making that possible. So for us, it was probably easier than for many others to shift to remote working. Nevertheless, it was challenging, of course. And even though we've seen a lot of upsides with working remotely in terms of less commuting and more productivity in that perspective, we also see challenges in upsell to current customers, the actual meeting and so forth. We also took of course, we were struck by the sort of the pandemic in the early phase, but quite quickly realized that we have solid finances, we have a lot of recurring revenue, we are in a stable position to actually say, okay, how do we use this time of uncertainty to actually position ourselves for future rather than wait for the pandemic to end. And realize that we are in a strong position. We set up a new plan on that in terms of recruitment, in terms of finding acquisitions, and also managed to complete an acquisition completely digitally during summer and integrate that company EFS during autumn very successfully. And we had a solid foundation with a strong company culture, processes and routines in place to onboard the people from that company in a very efficient way. And I would say actually that is the best integration or onboarding we've done of a acquired company. It actually became an eye-opener that it's much more equal when everyone can attend digitally rather than picking and choosing a few people going around and trying to describe and a lot of flights and with the impact has to have actual physical meetings. So it was actually an advantage. And I wouldn't be me presenting Formpipe without highlighting the fact that we have executed on our strategy of shifting the revenue mix to even more recurring revenue rather than one-off non-recurring revenue types like consultancy and traditional license. So we have continued to grow our recurring revenue part of our business. That, of course, is to large extent explained by the rapid shift that is ongoing towards SaaS in not only for us, but for most software companies. And we can see here going in 2017, we only had a little bit more than 10 million in SaaS revenue. When we go out of 2020, we have 58 million, a little bit more than that, in ARR on SaaS alone. And actually, looking on, it looked like quite small increase there in Q4, but it's actually stronger than first meets the eye due to the strengthened Swedish krona compared to other currencies. We needed to have the correct ARR. We have revalued the Q4 ingoing ARR, and actually the gross ACV prior to currency revaluation was 4.4 million. And we have about 80% of our SaaS revenue is in foreign currency. As I said, there is a rapid shift, and of course it pushes the growth on top line downwards since we are lowering the traditional license sales, which gets quite incremental good contribution to top line. And as you can see here, only going a few years back, we were on a rolling 12 months on about 70 million in traditional license, and that's now trailing down towards 35 million. So that's 35 million out of the top line. But the good news is that we're seeing the light in the tunnel here. The SaaS revenue, as you can see, is now making up for that total decline in traditional license. And going forward, that will continue to drive our top line also upwards rather than being a damp for our top line growth. Having executed on the strategy of going for more and more recurring revenue has held the growth on top line back, as you can see on the first line on this table. But you should also see the growth of the recurring revenue from that has been over 10% for multiple years in a row here. Year by year, we're growing more than 10% on recurring revenue. And we're doing that, combining that with increasing our margins, seeing that we're coming from quite low EBIT margins back in 2015 to now at least have decent margins in 2020. And of course, those two things are in conflict with each other. Only growing recurring revenue and then increasing EBIT margins at the same time is difficult, but we managed to do that. I would like to point out that we have solid finances, of course, and we have a very cash-generating business with the scalability of a lot of recurring revenue. Highlighting one specific product, I would like to highlight LaserNet, which is our customer communication management tool, helping mainly ERP systems to be better with their document management and communication to customers. It's part of our segment private sector, and it's mainly sold through international partner network towards other as a complement to mainly Microsoft Dynamics in the cloud, and also Temenos, a bank and finance system, but all sorts of ERP systems actually, even though we're focusing a lot on Microsoft Dynamics and Temenos. And as you can see, we have strengthened the Lasernet business, the ARR, quite significantly during 2020, going in with 56 million, leaving 2020 with an ARR on almost 75 million in ARR. Leaving 2020 behind, and even though we prepared a lot for it during 2020, we're now are ready to go for the next step on our journey. We've been focusing very hardly on margin improvement and growing by recurring revenue. Now we want to grow faster, and that is what we're setting up to do. And in combination with that, in the Q4 report, we also published financial targets for 2021 and 2025 up to 2025. Coming back to those later. We are focusing on accelerating growth in the US, where a lot of Dynamics and Temenos deals are done, and also where the market grows fastest, supported by an initiative on Europe, of course. So we're investing in sales and partner support to meet the demand that is in the market. We already have a strong network of certified partners, but we will continue to add more partners, but we will also make sure that our current partners get the help they need to make sure that we have Lasernet with them in every deal, not just once in a while. And we have a high share of recurring revenue, as I already mentioned, and we will continue to complement our organic growth with acquisitions. This growth journey is mainly about organic growth. So I've already mentioned the loyal customer base we have and the high share of recurring revenue, and how that has been growing with more than 20%, the latest already all the way back from 2016. The market, it's content services is a growth market. Gartner expects it to grow by 10% a year. But more importantly, they also predict that the transition towards SaaS will go very rapidly. In 2024, they predict that 60% of the total software sales will be software as a service. And that suits us just fine, and it's very well aligned with our strategy on how to grow this business. As I said, we're standing on two pillars. Public sector, where we are market leader in Sweden and Denmark. We will continue to drive that, and that will also be a growth area for us. Not as quick or high percentage growth as in private sector, but there is a lot of co-creation with our current customer base. It is very much top of every e-government initiative to talk about co-creation. And as a trusted advisor in the public sector space, we will, together with our customers, increase the footprint we have in the digital society and continue to grow our business in public sector and grow it profitably. In private sector, we see even better growth potential, and especially piggybacking on the success of Microsoft Dynamics. Microsoft Dynamics as an ERP system in the cloud is really gaining market share, and so is Temenos. And we are having a strong relationship with both of those and the partners within that network. So we will continue to join the growth journey that these two vendors has. So we will invest in resources to really make sure that the partners to these guys getting the support they need from us in order to include Lasernet in every deal. And we will continue to grow top line, but mainly through increasing the SaaS revenue even more. Looking on Lasernet, which is a part of our private sector business, but by far the biggest part of our private sector business. It has had an annual growth of approximately a little bit more than 12% the recent years. And that has been a growth journey thanks to the Dynamics 365 in the add-on that we are selling with Lasernet. We have now, during last year, strengthened our position significantly thanks to the acquisition of EFS that also have been selling Lasernet for many years as a partner for us, and with the complement of Autoform DM, which is another software that we gained with that acquisition that makes Lasernet even stronger in terms of archiving and keeping control of the documents that Lasernet creates. So what is Lasernet? Yeah, Lasernet is an add-on to Microsoft Dynamics and other ERP systems that simplifies business documents to be delivered in the format and layout requested. It could be anything from that you buy travel and then you get emails on, yeah, shouldn't you also book a hotel and a rental car, to actual invoices and making sure the invoices are in the right, in correct format digitally in terms of XML and so forth, but also adopting to brand guides, having the right logo and so forth. That is what Lasernet does for our customers. And also this market and the ERP, our market and the ERP market. The ERP market is even bigger than the content services market, but that is also expected to grow significantly. And more importantly, the same shift applies for the ERP sector as for the content services sector. There will be a swift transition to SaaS going forward. So 2021, a year of investments. We will continue. We will invest, and we see better possibility to find the right talent now in this pandemic situation where it's uncertainty on the employee market. We believe that this is an opportunity for us to find the right talent to increase our capacity to help our partners even further. I've already mentioned the Microsoft and Temenos partnership. However, bear in mind, this will mean lower EBIT margins in 2021. It will be a year of investment. So that let's not forget about that. But coming to the targets that we published in, we will have an average annual growth from on a revenue from 2021 to 2025 on 10%. We will, when we enter 2025, have recurring revenue of 70%. So we will the growth we're talking about will mainly come from SaaS and other recurring revenue. We left the year 2020 with 65% in Q4, so we're not far from it. But as I said, the revenue mix will continue to improve also from this point. And in 2025, we will have, with the scalable business model we have, with as scalable and it is to sell software as a service, we will gradually bring the EBIT back to the margins we have today and above those. And in 2025, we expect it to be above 20%. And since this is a cash generating business with a lot of payment in advance, we believe that we will be able to combine building the growth journey and still pay dividends to our shareholders. And we've set the target to be above 50% over time of our net profit. So in summary, we have a strong track record of delivering on our strategy, the strategy of driving recurring revenue, combining with improving margins. And we have a strong and foundation in our recurring revenue to go for this growth journey now. We've been the market leader in content service for many years, and we have a strong market demand in our market. We have the partnership with Microsoft, and now we have, with the acquired business of EFS, we also have gotten even closer to the Temenos channel. It will have a negative impact on the margins for 2021, but we are going for faster growth going forward. And both public and private sector will benefit from the swift transition towards SaaS going forward from now. Thank you. That I think my time is more than up, actually.
Perfect. Very good. Thank you very much. So I'll start off with a couple of questions, and then we'll let other people on the line in as well. So yeah, just making sure on the journey that you made or transformation you made with going from license to now mainly recurring revenues. Where are you in this SaaS transformation? Is it by now after Q4 that you're not seeing a headwind anymore, or will it be a couple of quarters, or where are we in exact timing in the transformation?
We're more or less not offering. I will have to answer in two phases: public sector and private sector. Starting with private sector, we're more or less taking out the possibility from our partner network to sell Lasernet and Autoform traditionally. There is no price list for that. So we're going for 100% as recurring revenue if we can choose. We will, of course, listen to a partner saying that their end customer wants it a traditional license and that's the way to sell it. Then we will come with a special quote. But we're really pushing hard for getting all of it as subscription or software as a service when it comes to the private sector. But there is still banks in the Middle East and so forth that very much wants to pay, especially in the Temenos channel, that wants to pay the traditional license up front because they have the cash is not the issue, and thereby they want to buy it that way still. And also bank and finance is a little bit more conservative than other areas when it comes to SaaS. But we really see that Temenos has good traction on their growth of SaaS, and that is what we really want to piggyback and support that journey of more and more SaaS also for Temenos. So that's for sure. When it comes to the public sector, yeah, it's two things. It's either the tenders, and the tenders, yeah, that's not up for us to tell whether or not the tender will ask for software as a service or traditional license. But I would say that the stage we are in right now, approximately half of the tenders coming out in our market in Sweden and Denmark, they are software as a service, but still half of it is still traditional license sales. So, and we will bid for both. Of course, we want to continue to be strengthen our market position and continue to be the market leader in these countries and bring on even more customers, even though the majority of our growth in public sector comes from current customers. And on current customers, the laws on how public sector can buy things allows us to, if they have our platform, even if they bought it traditionally, and we then launch an add-on module. For example, during 2020, a lot of our customers' employees worked also remotely, of course, and worked with Microsoft Teams. And a lot of the information created in Teams needed to be put in the public records, which is our system. So we built, together with Microsoft, we built and a couple of customers, we built an integration, making it completely seamlessly to store the right information that by law is necessary, right directly from Teams, directly into the repositories and the public registers of our systems. And that add-on software, we can now promote and sell software as a service or subscription on the current agreement that the customer already has. So we're not selling that up, we're not choosing to sell that traditionally. Instead, we say, let's add X thousand on your monthly invoice instead. And thereby we're growing the recurring revenue. That will not be on the SaaS line, that will be on the maintenance line, but in our revenue P&L. But nevertheless, it will be growing the recurring revenue.
Okay. And in the targets, how much, if SaaS revenues is roughly 14% today, how much is it in the targets? Did you quantify it? The SaaS part and with the rest being support and maintenance, did you split it up?
We're really not separating SaaS from other recurring revenue, i.e. support and maintenance agreement, and that's also due to laws on how public sector can buy. So it's a little bit potato, whether or not we call it support and maintenance or call it SaaS. When it comes to subscription recurring revenue for the public sector space.
Okay. And just so we get it right, the SaaS contracts that you have, what are the terms? Is it 1 year upfront, or what does it look like?
That's dependent on what the customer is, and we are so confident that that if a customer takes our software on board, they will see the benefits very quickly with it. So we are not contracting our customers to stay for 3 or 5 or not even a year. They're fine to leave whenever they like if they want to. We don't have a lot of churn anyway. The churn we're having is on public sector, mainly due to that the lawyers of the municipality says that now you've had this system for 10 years, so the laws oblige you to go in a new tender. Or on the private sector space, it might be a customer that is acquired by another company and they're shifting ERP system, and thereby Lasernet goes out with that ERP system. Those are the types of churns that we are facing, no other churns. So we're not that bothered about the contractual terms of how long we're tying a customer up.
Okay, makes sense. So just checking, do we have any questions on the line? Please raise your hand. Yes, Gabriel, go ahead.
Yes, thank you very much for the presentation. I have several questions. I will hope not that long. The first question will be on competition, because I don't know any company that's doing the same you do, because it's a very niche application, and I want to take some ideas about how competitors are behaving and how the industry is moving. The second question will be about the market, because the market is quite large. The market that you stated, it's quite large, but probably it's not specifically what you do. So I don't know if you have any figure of the market that you can attack more directly. And finally, I have a question about the different products and different softwares that you have on your portfolio. I imagine some of them are growing very hard, like very high, like Lasernet, but some of them are not growing at all, and you are breaking down. So tell me a little bit about the composition also of the different softwares, or how they are evolutioning. Thank you.
Okay, I'll start with competition. Competition on public sector is very local, but I guess you're mostly interested in what the thing I mentioned about the growth journeys of Lasernet and that competition. I would say there is of course competition. There are products for example, OpenText, who is a gigantic player, Canadian, who bought another, actually Swedish company, StreamServe, several years ago, and have a strong customer communication management tool for that. I think they've renamed it now, but there are several competitions to Lasernet. But I would say the main competition is actually system integration trying to code all the functionality that a third-party software like the Lasernet can provide. So instead, the ERP system integrator, the partner to SAP or Oracle or BAN or Dynamics and Temenos, they are building this by coding the customer communication management documents instead of having a much simplified process and using a third-party software like Lasernet. So that is actually where the biggest competition is. And we know that when our partners are realizing that they can bring in Lasernet instead, it makes their bid to the end customer much more likely to win, because bringing in Lasernet makes it possible for them, rather than calculating a number of hours it would have taken for them to build all the customers' documents. They will be much more cost efficient with that. So that is the benefit both for the partner and the end customer and for us. But bear in mind that of the ERP project, Lasernet is still the customer communication management part is still a tiny part. I would say 5 to maximum 10% of the total project or software revenue in a full ERP project will be the customer communication management part. The second question was on.
Yeah, the second question was on the market and the way you look at them, because the market, the general TAM that you stated is quite big, and imagine it's not covering specifically what you do. So if you have any figure about your most direct market and how you will attack that.
No. Actually, it is very hard. Since as you point out, we are a very limited part of the. We're not really a part of the European market at all. We are a complement to the European market, and that's called customer communication management. And there's numbers and figures from that from players like Gartner, for example. However, for us to look on market being as a tiny company as we still are, it doesn't really. It's not really the market size that is of relevance for our possibility to grow. It is the channels. So we are confident enough to say if we just get in the door to show what we're having, we will win the deal. It is a matter of having the bandwidth of getting in the door with the help of our partners, and to support the partners to have a hassle-free help to demo and install Lasernet into their end customer. So I don't have really any market figures to
right
now here. Yeah.
Right. Looking to that, I will add the third question later. But looking to what you just said, what percentage of the revenue is coming from your relation with that partners like Microsoft or so on?
Yeah, on the private sector, and as I said, the ARR number now is 75 million on Lasernet, and then we have services to support partners on top of that, and still some traditional license in it. So Lasernet would I think we had a number here on Lasernet in this year. It's a little bit more than 90 million that coming from Lasernet. All of that more or less is Microsoft Dynamics or Temenos. That's where we put our focus. Lasernet works perfectly on SAP, BAN, Infor, and other ERP systems as well, but we're not putting any focus on those areas because we consider that we have a technology advantage on those platforms compared to competition. While on SAP and others ERP systems, there are competition that are just as good as we are. So we're putting all our emphasis on those, and thereby those are the two that drives our business here.
Perfect. And the third final question is about the different software products that you have. Of course, Lasernet is going super well and growing fast and with recurring revenue.
Yeah.
But I don't know, there's a bunch of other softwares that it appears in the description of your company usually.
Yeah, we have the standard, the sort of the public sector case and document management platforms that put us in the market leading position of public sector in Sweden and Denmark. And those are very stable and they are growing, but they're growing by us adding on more users on current customers. Yeah, winning one or two new customers every now and then, but there's bear in mind that most of the public sector space already have a strong platform for this, either from us, most likely from us, since we have a big market share. But if they have it from competition, they will stay with competition as well, because what they are investing is to make more use of the platform rather than replacing the platform, because the platforms, the repositories on case and document management are very competent, both from us and our main competition. So the investment they're doing is to see, is there additional usage that they can use the platform for to involve and make it simpler for the citizens to do their e-government and so forth. And that's where we're helping them. And that's what I mentioned when I briefly spoke about public sector. We will continue to grow the public sector on top of the platforms and the customer base we're already having, with additional components such as the Teams integration tool that we built in 2020, such as digital signatures or portals for self-services that helps the municipality or the central government the tax authorities and so forth to be more efficient in their administration, making it possible for the citizens themselves, very much like the banks with internet banking, to you as a citizen can do the work for the public sector authority instead of them having a lot of case handlers. Okay,
and final question, because I was checking your website. Do you think ever to report your revenue by software, by every software?
Well, no.
I was thinking, as long as you are explaining Lasernet as a clear case, maybe all the software can be added to that explanation. But okay.
Perfect. Yeah. No, I think our being very transparent with Lasernet is that we sort of tucked it away in the private sector business area for numerous years, and the reason for being very clear about Lasernet is also to position Lasernet stronger, and that we see both in terms from the stock market and the investor relation perspective, but also towards the customer and the partner network. So that's the reason for that.
Perfect. Thank you very much.
Thank you.
Okay, so let's see. Do we have any other questions on the line? So I was thinking about the new target you put up. The 10% growth target, is that purely organic or does it include M&A?
We will continue to look for acquisition. That should not be necessary to add on acquisition, but I will give you an example why I will not be crystal clear in the answer here. Where we will combine our growth with acquisitions, but for example, the EFS acquisition did barely add any revenue to us because we bought a company that sold Lasernet for us traditionally, and we now, with taking over that company and that pipeline, we've turned everything to SaaS. So we're actually lowering the top line by us being the owners of that company rather than the EFS running it as they did, the previous owners did. Meaning that, okay, what is then acquired growth in terms of our EFS acquisition or not? If we would have continued to drive as separate units, we would actually have had a higher top line, and thereby us changing the business model of an acquired object would be very easy for the analyst to say, okay, you bought a £4 million turnover company, let's add that to your turnover, but we're actually reducing the turnover. So I will not guide you in that. We will continue to do acquisitions, and to the very major in the growth will be organic to a very large extent. Yeah.
Okay. Yeah. Clear enough. So on demand.
Victor, you have a raised hand from Carl, I think.
Sorry. Yeah, sure. Carl, go ahead.
Yeah, thank you. So I have a question on the Temenos platform. Can you say anything how you have sales has developed since you have been launching on the platform? Because I think that is a quite interesting growth opportunity for you going forward, right?
Yeah, definitely. It of course takes some time to shift the pipeline to SaaS if you're have it built up. But it's been very successful. I don't have Temenos numbers of Lasernet and Autofarm on top of my head here on how much that has been there, and if that has actually been helped by us, or if we would have gotten that sales anyway from the EFS, but in traditional license instead. So I don't have numbers on that, but we for sure see that we've made a very, very successful integration of the business and the capacity we have going forward to support the Temenos channel. It's a game changer for us, being able to drive that and coming closer to Temenos, and also going for the investment in the US with Temenos. So it's a big thing, yes.
Yeah, thank you.
Okay, and coming back to the targets, it's pretty clear that you expect the margin to be down this year due to investments in the organization. But what about next year, have you said anything about that? How do you define near term on the new target?
We will add quite a lot of cost in 2021 and in 2022. But we will also add quite significant values of recurring revenue that will finance a lot of the cost increase in 2022. I would say that the harder the hit will be in 2021, the more successful we've been in finding the people we want to find to have more bandwidth to support the partner channel. And the more sales we have the going forward in ARR, the more cost we will probably add on as well in 2022. The plans we made so far and what the financial target sets out, that is mainly investments in capacity in 2021 and 2022, and then having the increased ARR taking us back to above the current margins for the years after that. However, having said that, if we are as successful as we believe we will be in this, or we're certain that we will be, we might also consider opening another geography or increasing even more in order to go above the 10% in growth, and thereby delaying the margin approval a little bit further. But that will be a decision for 2022, late in 2023. In that case, depending on where we are, this is set out where we are right now, and investments in the capacity we see to promote the growth of 10% a year for the company, and going back to those margins in 2025.
Okay, and what kind of geographies would that potentially be in a couple of years?
No clue. We're very much focusing on Europe and US right now, and very much focusing on only the channels of Temenos and Microsoft. And you could argue, yeah, but if Lasernet is so great, why don't you sell it on SAP as well? Yeah, but it's a matter of we're still very, very small. If we could add another 10 people on Temenos or Dynamics, that would probably be more than we actually have planned. That will also probably be better return of investment than adding another ERP system, because it's still very small numbers that we're talking about here. So as I said, it's not the market size or the market demand, it's our capacity to deliver and execute that is the divider here.
Okay. So and you touch upon it on the churn that with one of your segments, the public segment, you're kind of built in, and in the private segment, low as well in terms of churn. Have you quantified it, the gross and the net churn numbers?
No, we have not disclosed any such numbers to you guys, but we will going forward from Q1 and so forth. Parts of it anyway. You will have in what we have in churn.
Okay, great. Looking forward to that. So, do we have any final questions maybe on the line? People listening in. So I just have one final question. Maybe just a trend of in some areas, public entities collaborating to finance new solutions. I think in Denmark that has been the case. How is that trend? Is that a trend? Is it affecting you? What to expect, or does it not matter?
Those sort of initiatives arises every now and then. It's been doing that in Sweden. It's definitely did it back in 2011, 2012 in Denmark with initiative, not actually building co-creation. We are very much pro that, being close to our customers and helping them on their digital journey. That is, and we will build products for them, and they will come with the innovation ideas for us, and we will help them how to solve those tasks. That actually benefits both the taxpayers, the customers, our partners, and ourselves, because that is productive and good and drives our recurring revenue. What happened in Denmark was an initiative where a bunch of municipalities formed a club together and bought a lot of consultancy to try to build an ECM system from scratch. That is, in my view, of course, in my view, but I'm trying to be neutral, but that is to destroy taxpayers' money, because such an initiative will always crash in the end due to that maintenance of such a platform will eat up all the investment in it over time. And we were significantly hurt by that back 5-6 years ago, and we really have rebuilt our business due to that in Denmark and adopted to that market change. But over time, that market will come back. Ville, I saw that you raised your hand.
Seem to be on mute.
Yeah. Ville, du hörs inte.
Okay. Maybe
I think Wilhelm posted his question in the chat box.
Okay. I don't see it. Don't see that. But,
okay, so here should Formpipe be split in 2 companies in 3 years, given a different strategy in public and private?
Well, I don't think so. But yeah, that's an interesting question. Well, yeah, I mean, we're still a very small company. It is. And we have use of each other. Yeah, it's different, both go-to-markets, different markets, customer bases, and different products. So it's doable, but I really don't at the moment see the rationale. But it is two different customer bases and different business models that we're going for here. So. Yeah, you could argue for that, but we're sharing overhead, we're sharing a lot of management and so forth. So there's pros and cons with such a setup. I would say. I think perhaps we should be bigger prior to doing that, but it's an interesting thought.
Okay, so let's see in a couple of years what you will be doing. So I see he's typing maybe a follow-up question. He says thanks. Okay, so great. I think that was all of my questions. We've been running out of time here, so thank you very much, Christian, for taking the time. Very good presentation.
Thank you.
Okay, thanks for being with us.
Please reach out to me if you have follow-up questions. No problem to connect with me.